Are long-term bonds giving us clues about a market crash or correction in 2021? Alright, now that we've probably lost about half of our audience because people tend to think that bonds are boring, in this video, we'll be taking a closer look at the bond ETF TLT and how spotting breakouts in TLT provides clues about future market corrections. Bonds might not be very sexy or exciting like Tesla stock or Bitcoin, but they can give us warning signs about future inflation expectations, rotation from risk assets to safety assets, and potential market corrections. These are just some of the reasons why it's important to keep a pulse on bonds. To start off, the TLT ETF holds a mix of long-term maturity bonds. Here's an actual breakdown I created based on their current holdings. As you can see here, the majority of the bonds held have a maturity of 25 years or more. Traditionally, bond prices have a negative correlation to equities, meaning that when stocks go down, bond prices tend to go up. This is due to the nature of equities being a risk asset and treasury bonds being perceived as a safety asset. However, this relationship does break down from time to time. For the viewers that are new to the markets, when bond prices go up, the yield on that bond goes down. Bond demand can go up due to market participants rotating from risk assets to safety assets, or due to the markets pricing in more risk of deflation and slower growth in the future. Now, let's take a look at a chart comparing TLT with SPY, the ETF for the S&P 500. Let's begin by uncovering how TLT was showing warning signs of a flight to safety before the market crash in March of 2020. Looking at this daily chart, in August of 2019, TLT made an initial move higher and then drifted lower into 2020, while the S&P 500 generally continued going up. Let's draw a downtrending resistance line here and find the clue. Notice how price breaks out in late January and also breaks out of a horizontal resistance line right here. Both of these clues signal a continued push to higher bond prices, which means a flight to safety out of equities like the S&P 500 and into bonds. The S&P 500 fell over 30% shortly after these warning signs. As we all know, hindsight is always 20/20. So let's see if there are any additional current red flags implying future market corrections. Hey guys, if you're enjoying this video, please hit the like button and be sure to subscribe so you don't miss out on my future videos. As a brand new channel, this helps out tremendously with the YouTube algorithm and gives the channel a chance to grow and provide more quality content in the future. Thank you. Now back to the video. Looking at this chart courtesy of the Cleveland Fed, we can see that initially the 10-year inflation expectation cratered all the way down to 1.16% as a result of the crown sickness. But due to unprecedented monetary and fiscal stimulus coupled with the vaccine news, inflation and growth expectations have been on the rise. What's interesting to note in this chart from Hedgeopia is that despite a current record short position in 30-year bonds, bond yields haven't even returned above 2%. As the yields have been edging higher, the shorts have started covering their positions. If we look back at previous times when shorts covered their positions, we can see bond yields actually going back down and bond prices going higher. The Fed is currently also steadily buying $120 billion in bonds per month until at least 2023, putting a huge wind in the back of bond prices and suppressing bond yields. Alright guys, I want to know what you guys think will happen to long-term bond yields. Do you see them continuing to go higher, pushing bond prices down, or will they drop back down, pushing up bond prices? Comment below and let me know. Lastly, let's review recent TLT price action. Looking at this daily chart, TLT has been in a down channel since August of 2020. This is in line with rising inflation expectations that we reviewed earlier. What's interesting here though is that TLT bottomed on November 9th when prices opened up with a gap down, but buyers stepped in and defended the $155 area. That was the last time prices came close to touching that bottom channel, meaning that bulls are stepping up and absorbing available supply around this area. We can see another bullish hammer close right here, confirming the support line that runs all the way back to 2018. Notice the similarity of price action now and 2019 before the breakout that happened right here. So what's next? Watch closely how price behaves along the support line from 2018. Right now, we can see lower highs and higher lows, which decreases volatility and winds up the price for a big breakout one way or another. If you're bullish on the equity market, you want to see the price of TLT fall back below the 20-day moving average, which is shown here in red, and definitively break through the support at around 155. Based on this chart and other factors we discussed, it might not be a bad idea to buy some equity protection right now. If TLT bulls take control and push prices much higher from here, we could have a reversal of the reflation narrative and a market correction on the horizon. I want to thank you guys for watching, and I look forward to seeing you in the next video.